So let's talk a little bit about Bitcoin wallets and ways of storing our Bitcoin. So maybe if Michael, you want to just chat a little bit about how you think about that, and how should the new Bitcoiner think about learning to do that process of storing their Bitcoins, and if there are any particular wallets or any particular, I guess this moves and changes over time, but at least as at current day, what's the current situation there?
I mean, it seems like there's a lot of choices, right? Ranging from mobile payment applications that have open wallets to wallets that come with the exchanges that may be multi-factor. I mean, that could require YubiKeys to to hardware wallets that are more secure. And then there's downloadable mobile wallets that some support Lightning and some don't. And there's like a host of them, like Blue and Moon and the like, and they all have various pros and cons to them. I don't think I could give a single recommendation to anybody. I think that as people get more security conscious, they tend to move toward hardware wallets with multi-signature, multi-factor authentication. But it all depends upon how much Bitcoin you've got, and also where you are, and also, are you a business or are you an individual? And maybe you have some other personal issues. What's your transaction frequency gonna be? Matt might
Yeah,
have.
those are all important considerations. And I know, Michael, we've only got you for a short period of time, so maybe one more question just for you. For new Bitcoiners, how should they think about their, accumulation, and why is it important that they are, setting up that regular accumulation strategy? Why is that an important thing for them when they're just getting started and learning about Bitcoin?
Well, I think in our current monetary environment, you could reasonably expect that the economic energy in any currency in the world is going to lose 1% of its value every month. And in a weaker currency, you would lose 2% of your value a month. And so if you're saving your money in a currency, then the clock is ticking and you're losing your savings. If you're saving your money in bonds, it's no better. You're still kind of losing your savings about the same rate. If you're saving your money in a stock or a stock index, generally at least half of the value of the stock, if not more, is based upon the cash flows, which means that a lot of value stocks will just look like bonds. They look like currency derivatives. So a large number of things that you could hold with your life savings are exposed to currency debasement. And so it's important that in a weakening currency, you, in a disciplined fashion, be converting your economic wealth over into an deflationary asset that's not going to be debased, that won't be inflated away, and that presumably will appreciate in value faster than the rate of the currency expansion. So Bitcoin is kind of that engineered savings account in cyberspace. If you hold 90% of your money in the other savings account and the currency loses lots of its value, then your life savings is just leaking away. So I think discipline with regard to where you store your wealth is kind of critical. And you might think you have a bit of time, but the problem is that the weeks fly by and the months go by, and at a 15% in monetary inflation rate, that means that you're going to lose half of your money within about 4 years, and so it goes fast. So I think the good discipline there is helpful. Just be protecting yourself financially.
Yeah, and I think that's the important part. It's the why. It's like, yeah, you have to pull all the pieces together and pull it together into a thesis and think, okay, this is the situation we're in. This is the reaction. I need to save my wealth into something that is going to actually preserve it for the long term. So, Matt, do you have anything to add on that point?
No, I mean, Michael just nailed it there. So
Yeah,
100% agree.
I guess what
Exactly.
we can say is that if you're in the US and Europe and you're in a strong currency that's kind of pegged to the dollar, we kind of think that that's weakening 15% a year, maybe more, but like 15% a year, a little bit more than 1% a month. But if you're in a currency that's weaker, that is weakening against the dollar, certain currencies, the second tier, they're weakening 20% faster. And the third tier currencies are weakening 2 to 3 times faster. If you think that the currency that you're working in is weakening against the dollar, like you can see this in Turkey, you can see this in Lebanon, you can see this in certain other countries, Nigeria, you should scramble harder, right? You don't really necessarily, the risk of not doing anything is higher than the risk of doing something. And so there becomes a point where I would say people ought to move fairly aggressively to at least get their money out of the weak currency. You got to judge how much you trust that currency in your given country, wherever you might be. Well, I mean, I think you got a lot of choices. I would probably err on the side of picking the most convenient Bitcoin application or exchange you can find in your jurisdiction. It depends on what country you're in. And if you buy one on an exchange, make sure you can take the Bitcoin off the exchange to your private wallet. So you could buy it through Fidelity and take it off the exchange, or you could take it off the exchange of Coinbase. And I kind of like Square because you can buy it and also take it off the exchange. There are some Bitcoin purchase routes that I won't name where you could buy the Bitcoin, but you can't take custody of the Bitcoin. So you're really just buying a Bitcoin derivative and you would be trapped with that custodian. I think that my first advice generally is get yourself some Bitcoin. That's my first advice. And my second advice is when you get the Bitcoin, make sure you get it from a place that will let you switch custodians or take personal custody of it. And then after you do a little bit, then start to get educated, and then you'll form opinions about where you want to hold it long term and how you want to hold it long term. And you'll have all your options available to you.
Excellent. Matt, do you have anything to add there in terms of how to acquire Bitcoin?
I mean, I think Michael really nailed it on the head there. The number one thing is don't be afraid of it. I think people tend to get overwhelmed very easily. And a very good way to start is to just get a little bit of Bitcoin, take custody of it yourself, and play around with it. Get comfortable with it. Send it around, send it back to yourself. Maybe if you have a friend, you can send it between, and just get used to like the whole backup process. The whole concepts around Bitcoin on the surface seem very, very overwhelming to people. But once you start to get used to it and get comfortable with it, it's a lot more approachable.
Yeah, and so there's different ways to get involved. Another way is actually to earn Bitcoin. So do either of you guys have comments on how to go about doing that?
I'll let Matt go.
I mean, I think this question is probably a little bit premature. I think for most people right now, it's, you kind of have to seek it out. If you want to earn Bitcoin, you have to maybe, you find a job that your boss loves Bitcoin, right? And you ask them to pay you in it. But I think going forward, when you start to look at like a 5-year, 10-year timeline, the majority of people who the way they get Bitcoin is going to be because they work and they get paid in money, and that money is going to be Bitcoin.